So we have this particular question that we want to answer on. Specifically, this video is on target costing. So we want to read it. That's the question 6 you're seeing on the screen. A company is developing a new product using a target costing approach. The initial assumption was that a sales volume of 200,000 units could be achieved at a selling price of 25 kwacha per unit. However, market research indicate that to achieve the sales volume of 200,000 units, the selling price should be 23.5 kwacha. The company wishes to obtain an average profit margin of 20%. The following data have been estimated for the product. Direct materials 10.45 per unit. Hourly production volume is 20 units. Direct labor costs are 64 per hour. Variable overheads are 82 kwacha per hour. And then they're saying they're based or they're absorbed on direct labor hours. Fixed costs to produce 200 units are estimated to be 680,000. What reduction in the cost per unit is required in order to achieve the target cost per unit? Okay, so we need to first know what the target cost of this company is before we even know what cost reduction would have to make in order to achieve that target cost. Because all we've just been told is that they might incur the following cost. Materials will be 10 points that per unit. So we'll just have to first know the total cost that they will actually incur with the target cost in mind. So let's find the target cost first. So the target cost usually works with the planned profit that this company wants to achieve first. They always set a profit that they want to achieve at a given selling price. So let's do that first. So you would have this, they want that in order to achieve what their profit. Okay, so since those materials equally they were given in what do we say in what? Okay, they were given in per units and they're like you can solve it either way. You can go in the per unit way, or you can first find the total sales they are planning to achieve. From there, then we can convert. But I believe both methods can still work. Yeah. So here we have this target selling price of 23.5. Let's say with those units they want to sell, meaning most likely their total sales are this company. Then when we get 20% of this, because it's even a margin is charged on sales to know what they are planning to even achieve. So they wanted to achieve a profit of 940,000. This company, that's the profit they're planning to achieve at that given selling price when they sell. Yeah, so it's the total profit they want to achieve, but it's not yet in per units. Take note of this, it's not yet in per units, but that's just the total assisa sales and the total profit they want to achieve. Then what would be the target profit in this case? Because target profit is simply the sales minus the profit they want is equal to their target cost. Sorry, the target cost, only not the target cost. So it's the sales minus the profit, not the cost price that they are targeting. So if they had to sell that for 7 minus the 940, you know that they should get 3, about 3 something. So 47 minus 940, 3760 million. So 3,760,000 as their target cost. So if you go to the question, you multiply everything their actual cost that they might incur, materials make up the cost, the labor, the variable overheads from the given question, you find that we'll land with this kind of cost. Let me just show you. So hopefully this working here is clear. If you look at the materials, I just took everything as an overall total so that it's done. So if you see, I multiplied the material cost, I found that labor, I found the total for labor costs from the given question. Variable overheads, just multiplying the cost per hour times the labor hours. The labor hours are the ones that were supposed to be multiplied by cost per hour. Maybe the only trick is how did I find the labor hours? At least material looks straightforward because it's working with the unit, so the cost per unit, at least you just know you're multiplying with the units that they're desiring, 200,000. But maybe for the labor hours, I'll just explain how I got the 10,000. But fixed overheads, they just gave us a total like that. Then when you sum up everything, this is the actual cost this company will incur, 4,230. But what did we plan? Our target cost should be 3,760. So hence that's why they asked, what cost reduction do we need to make in order to achieve our target costing? Because this shows us that there is actually a cost gap. That's how we know there's a cost gap, because when you have a target cost and your actual cost, there's a difference there. This is what we would call a cost gap, and that's the one they want us to know, so that we can reduce by that amount and know that, okay, this is what we need to do to achieve our target costs. But let me just quickly show you how I did the labor hours before I show you how the subtraction that needs to be made to reduce that. So there was this statement in the question that hourly production volume 20 units, meaning 1 hour 20 units. What about 200? That's what I did here. That was the proportion I made. If you can see, there's something being written on the screen here. If 1 hour it's 20 units, what about 200,000? That's how I did it there. Yeah, so basically I found 10,000 hours, and those are the ones you saw there. And once you now have the hours, it's very easy to apply them now into the cost per hour they put on labor, which is how much? 64. Yeah, 64 per hour. That's what I did. So I took the overall approach. I found the overall costs, and also found the overall target cost that they wanted. Now let's do this to find this reduction they're looking for. So we know this is what they have incurred, like actually expecting to incur. Well, we know that this is our target cost here below. This is our target cost. Now, if this is what has been actually incurred, and we have a target, they've asked us what cost reduction should be made in order to achieve your target cost. But they said the answer should be in per unit, but we'll do that soon. So we just subtract, because we want to know that difference. That's what we must reduce by. That's what the question is been asking us for. We know the target cost, and we know that we've actually incurred this. So what should they do to reduce? Just get the difference between the actual incurred cost and the target. This gives you what? 47 as the cost gap, or the difference, but they wanted it in per unit. So go ahead and divide this by the number of units that they are planning to sell, 200,000. This gives you 2.35 kwacha per unit. That's the cost reduction that has to be made. So just understand this: the company has a target cost. You incur a certain amount of costs, most likely it might even be more. What do? You need to make a cost reduction, and the cost reduction is based on that actual cost incurred and the target. That's the reduction that needs to be made in order to achieve the given target cost. So basically, this is what target costing looks at. You would have always, you set up a desired selling price, a desired profits. From there, so you work around your details to understand and interpret this. Otherwise, that's target costing.